Hey guys, so what did I do this week? I bought 6 stocks in my M1 Finance account. I sold out of all my ETFs. Yes, my famous 3 ETF pie is gone. And I've jumped on the DGI bandwagon. I'm not going to call it a bandwagon because it's actually a very solid investing strategy. Now, I didn't go full DGI. I like my yield. So I did buy 6 stocks that pay a very decent yield, all at about 4% or higher. They're all dividend growers. Some of them a little longer than others, and some of them at different rates, some of them at very extraordinary rates. I bought a value stock that is flying under the radar. It might have a couple of issues, but it's definitely a cheap stock. And I bought a high performer as well that a couple of YouTubers have pointed out here recently. And after I looked, I said, okay, this might be the way to go. And another reason why I've done this with M1 Finance is because I am starting to look at my retirement plan, and I'm trying to figure out, because I'm going to retire at 55, and I have 2 Roths that I'm going to fund, and for me and my wife, and I have to figure out how I'm going to spend down the money from age 55 until 59 and a half, when I can access the gains from the Roth. And also, one Roth I don't even want to touch at all. So I got to figure out how much I'm going to need in the M1 account, and in one of the Roths I'm going to be able to withdraw whatever I contribute from here to age 55. So I decided to start focusing in on M1, and I'm going to share with you the 6 stocks I bought. I think they are all representing value right now. And let's get right into it. So we'll come over here and you'll see my new pie, and I named it DGI I Shall Do. And I wish I could hit reset on this. I wish this would go away because this is an anomaly. But let's change it over to one day. It looks like I lost, but I didn't. I'll explain. Actually, I did a little bit, but. So first stock on the list is Avgo. And if you don't know, Avgo is a big semiconductor company that just announced a $15 billion contract with Apple. Or I don't know if it's a contract. I guess so. It's a commitment for Apple to buy their products. I bought this on Tuesday at an average cost of $307.68. Only got in 1.1555 shares, and it's already up to 324. So that's a 4% dividend yield on Avgo right now. And they do have a 5-year dividend growth rate of about 55%. So they've increased their dividend 55% annualized over the 5-year average 5 years. And they've been growing their dividend for 8 years straight now. And that's Avgo. Next up, I've had in one of my videos, and I went ahead and bought them, is ExxonMobil. And I bought that on Friday. And I got 5.17348 shares at an average price of $66.52. It has a dividend yield of 5.2%. The 5-year growth rate is a little low, 5%. 10 years is about 7.5% in the dividend growth rate, but they've been growing that dividend for 37 years. 37 years. That's pretty amazing. And oil is definitely under pressure right now, and I think a good buying time right now. So I got in at ExxonMobil at 66.52. Next up, this one is kind of a speculative. This could have gone into my contrarian video, and that's Gilead Sciences. Gilead Sciences is a biopharmaceutical company, and I got 4.86144 shares at an average price of $62.76. They have I locked in a 4% dividend yield. Their forward PE, I believe, their current PE is 30, but I think their forward is like 10. I could be wrong, but it's pretty darn cheap. Now the knock on Gilead, I'll show you. And that's why I say it's kind of a speculative play. If you look here at the 5-year chart, it's been nothing but down. And we've been sideways consolidating all of 2019. Now the knock on them is that they haven't done any, no major breakthroughs in product and no acquisitions. But they are probably one of the healthiest as far as cash-rich balance sheets that I've ever seen for a pharmaceutical company. They have $23 billion in cash and $25 billion in debt. That sounds like a lot, but a lot of these pharmaceutical companies are humongously in debt. And for them to only have $2 billion in net debt is pretty amazing. So they can definitely, they need to get an acquisition going, and I believe they will, because I think the reason why they haven't is because they haven't found anything that was right for them, and I think they're doing it smartly instead of just going out and buying just to buy. So this represents a great value if you believe in the company and what they can do going forward, and they're healthy, and to get a 4% yield. They've only been around a few years. They were paying a dividend anyway. Their 3-year growth rate is 11%, something like that. My notes are a little fuzzy, but that's Gilead Sciences. Next up, the most popular 3M companies. I had this a long time ago. I was like, what is that? But I do have now 1.4423 shares at an average price of $178.95. Bought them this morning, or Friday morning. They do have a 3.24% dividend yield and 5-year dividend growth of 11%, 10-year dividend growth of 11%, and they've been raising that dividend for 61 years. So that's 3M Company. I really didn't do a whole lot of research on this. I just think they were fairly valued on a forward PE basis, and the strength of that dividend and the dividend growth, and being at 3M, I just went ahead and bought. Next up is another company that I had in my 4% dividend yield video, and that's IBM. And IBM, I got 1.80615 shares, average price of $142.90. They dipped they dipped a little bit, 1.6%. I don't like when people say they took a big dip. $2 isn't a big dip, but I'll keep buying. PE ratio of 16. Their forward's a little lower than that. Big time dividend, 4.54%. They have increased the 5-year at 9%, the 10-year at 12%. And that's IBM. Another one I don't have to do a whole lot of research into buying. That's one of the good things about buying some of these. big time companies is you pretty much, I mean, you can do a cursory valuation, look at their PEs, check out their earnings per share, check out the major news, but for the most part, you can kind of just buy them. Now, the last one is a value stock, and I wanted a financial company, and if you looked at my 7% dividend yield video, I had on there Invesco, and I decided not to go with Invesco. I wanted something, I think, a little bit more stable, and so I started to look at insurance stocks. And, the popular ones came up, Prudential, Travelers, there was a couple others, but their valuations, they're fairly valued. But this one stuck out to me, and this one is called the Unum Group, ticker symbol UNM, and they are a mid-cap company that does disability insurance, accidental death and dismemberment insurance, all those insurances that you get, that your employer gets you like it's some sort of benefit. This is what they do. Most of those policies probably never pay out, so they're in good shape financially. They did have some issues with some long-term care policies that they sold, and there's some issues about, if they're going to pay out and the amounts. I mean, they're going to pay them out, but if they had to pay them out, there were some issues about how well they're going to cover that. But for the most part, this is a very healthy company. The valuation is it's very cheap. I think it's like a 6 PE, I want to say. But I picked up 6.04602 shares, average cost of $28.46. Yeah, look at that PE. 5.9 PE, market cap 5.9 billion. I got a 4% dividend yield out of UNM, and this is a sleeper company right here. You might want to take a look at this thing, because a 5-year growth rate in the dividend is 12%, 10-year growth rate is 13%, and they have 11 years of dividend growth. So UNM is that ticker symbol. So, and I dropped in, let's see, I've been doing $10 a week since January. And there's the $10, there's the $10, and here's on was it Tuesday? Yep, it was Tuesday. I sold out of my small cap and my QQQ, and I bought the Avgo and Gilead Sciences. Then I deposited $100 Friday morning, and then I sold off my SPHD and bought all the IBMs and all the rest of the stocks. Reason why I sold out of SPHD, the big reason was the holdings in SPHD. They're great holdings, but a lot of those holdings fit a lot better in my high yield Roth IRA. So a lot of the holdings in there, I'm probably going to end up buying at certain times in my Roth IRA. And so I wanted to get exposure to other things. So I got tech exposure in Avgo and Gilead that I didn't have in my single stock. I got financial exposure that I didn't have in Unum Group. And I got industrial exposure that I didn't have before in 3M, and I had a small amount of energy. So I think all these are in very good buying opportunities. Avgo had a good 5% jump here in the past, since Tuesday. Look, let's check it out. Yeah, look at that. Since Tuesday, I bought this at Tuesday morning, and it's already 5.3% up. Gilead, I'm flat. Everything else, is only because I just bought this morning, Friday morning. So that's it. I've officially joined the DGI camp. I'll add to this. I'm gonna definitely add to this. But right now, I'm gonna add. I have to have at least a 3% dividend yield, because I like my dividends. They have to be a very fairly valued company. I'm not going to go after. I really wanted a consumer staple stock in here, but I do not see one that is fairly valued. I think there's going to be some opportunity coming up this year to get into a consumer staple stock. One that's a sleeper that I think that they wouldn't qualify for this portfolio because they cut the dividend recently is Kraft Heinz. I got to do a little bit more research, but they've been sideways moving for ever since they cut that dividend. They've been sideways moving. I want to see what they're planning to do for the future growth. So that's it, guys. DGI I shall do. And I'll probably be updating this. I think I'm going to just update this once a month. I'm going to have a new series called My Road to Retire in 2030, and it's going to be sharing my complete dividend income every month. I might do it twice a month, and I have a little simple Google spreadsheet that really breaks it down really nice. And so look forward to that. February 1st, I'm going to be putting that out, probably 1st, 2nd, somewhere in there. So anyway, you got any comments, any questions about these stocks, or anything that you think would fit in here, leave them down below. Love to hear them. All right, guys, we'll talk to you later. Bye-bye.